Okay, welcome everybody. So we are going to move into the business of today. The topic that we decided to discuss today is demystifying cryptocurrency. We want to talk about cryptocurrency. It's something that a lot of people have heard about, a lot of people even know so much, okay, but there are still a certain percentage of people who don't even have an idea of how it works. They must have heard of cryptocurrency or things relating to cryptocurrency, but they don't have the slightest idea of how cryptocurrency works. And the aim of this class is to demystify cryptocurrency. So, we want to talk about it today, and I believe that God is going to help bring us to a good understanding of what cryptocurrency is. All right. Cryptocurrencies is a popular technology that uses advances in cryptography. Okay, when we talk about crypto, it means encrypted. Okay, encrypted means secure, locked, protected. Okay, so cryptocurrency is, in a layman's language, a currency that is secure, a currency that is encrypted, a currency that is locked, a currency that let me also put it in this term, you can't see it. It's not a currency you can touch. Okay, it's there, but you can't touch it. So it's a digital currency. I would like to bring us up to speed on how the financial world is advancing per time. There was a time it was trade by barter kind of financial transactions. Okay, for you to buy something, you must have somebody who wants exactly what you have, and you need exactly what the person has, and you people exchange. Okay, from that we moved to cowries. From cowries we move to precious stones. From precious stones we move to coins. All right, from coins we move to cash. Okay, we move to paper kind of currency. And even as we're using paper kind of currency, we actually digitalized paper kind of currency. That's how you're able to send money from your bank account to another bank account without actually going to the bank or without carrying cash around. Okay, so paper currency was even also digitalized. You don't even need to touch the money, just because you have the technological means of using an application. You're able to send money, in fact, even from one country to the other. And the next level of advancement that currency has made is the introduction of cryptocurrency. So it's just a new technology that came up recently. Okay, I won't say recently, because if you go through history concerning cryptocurrency, you find out that a lot of people have been working on cryptographic systems. A lot of people have been working on currencies that government cannot actually influence, currencies that people can't influence, currencies that are, will I say, um, non, you can't influence it, is decentralized. That's the word I was looking for. Currency that is decentralized is not something centralized, because each and every of the currencies that has been used for financial transaction, up until the paper kind of currency, is actually centralized. Government controls it. Government can decide what to do with it. Most of us remember, I think it was in late 2022, early 2023, when there was cash crunch. Okay, so many people couldn't get cash. We had that discrepancy of the old money and the new money. I'm talking of those of us that live in Nigeria, the old money and the new money. So we're limited to a certain amount of cash. All right, most people had to resort to using the digital method of transferring money. But when it comes to maybe buying something with cash, it was quite difficult. All right, now that was because government was controlling it. Government was controlling the amount that we had on. There has actually been an advancement that researchers started looking for right from time. It was an advancement that they started making research on. What can we do to make sure that currency or transaction is not centralized or controlled by the government? And that was what brought about cryptocurrency. So crypto is a decentralized currency, just like I mentioned. Decentralized means there is nobody in control of it. Okay, it looks as if everybody is in control, nobody is in control. It's a decentralized currency system that represents a completely digital value exchange with which is securely documented and encrypted, just like I mentioned. That's what even brings about the name. I'll just move to the next slide. All right. After explaining what cryptocurrency is, we'll move over to crypto trading actually. Crypto trading is the buying and selling of cryptocurrencies with the purpose of realizing profit as a result of the price changes of these assets. But remember that I mentioned that one peculiar thing about cryptocurrency, it's not something you can touch with your hands. It's not something that anybody can control. It is decentralized. Nobody controls the cryptocurrency exchange or cryptocurrency transactions. It's totally decentralized. Okay, I hope we get this. So we are going to move over to what actually is cryptocurrency used for? What is the essence of cryptocurrency? We know that the essence of anything that is currency is for transactions, buying and selling, trading, business, exchange of value, exchange of services. That is exactly what currency is used for. And of course, cryptocurrency is used for the exchange of goods, exchange of services, buying and selling, and of course, trading. All right. So let me just break it down in a very simple way that we can understand. I mentioned that cryptocurrency is, of course, decentralized. Nobody controls it. And because it is a currency, it is used for transaction, it is used for buying and selling, it is used for trading, it is used for exchange. That is simply what cryptocurrency is all about. So we talk about how one can have cryptocurrency, how one can receive cryptocurrency, how one can exchange cryptocurrency, how one can trade cryptocurrency. So I've mentioned before that crypto trading is the buying and selling of cryptocurrencies with the purpose of realizing a profit as a result of the price exchange of these assets. As compared to more traditional markets like stocks or bonds, the crypto market is highly volatile. Prices can fluctuate quite significantly across assets and make double-digit percentage moves within mere minutes or hours. This volatility provides for greater upside as well as greater risk for traders, making crypto trading appealing to aggressive traders. So this is just a summary of how the cryptocurrency market works. It's very, very volatile, which means that the value of a particular cryptocurrency, let me break it down in a way that we understand. For instance, in Nigeria, we use Naira. In the US, we use dollars. All right. The value of Naira to dollars right now is, I think, 1,139. Last time I checked Naira metrics. It happens to be that at a certain particular point, the Naira can go up, appreciate, that's reduce in the equivalent to the dollar, or depreciate, increase in the terms of value to the dollar. So that's what volatility means. So cryptocurrency is a very volatile kind of currency. So you can have the value of a currency spike so much in minutes, in hours, in a very short time, because it's not controlled. All right. Normal currencies that are controlled don't do like that. Remember, I said cryptocurrency is decentralized. No government, no bank, no individual controls it. All right. So that is why it is so volatile. It can increase in value at a very short time, and it can also decrease in value at a very short time. Okay, let me move over to the next slide. There are key features of cryptocurrency that I want us to take note of. This is very important. Key features of cryptocurrencies that I want us to take note of. Number one is decentralized. There is no central authority control that issues or controls the currency, just like I mentioned. No bank. It's just like we have in Nigeria, Central Bank of Nigeria, that controls, or will I say regulates, transactions and regulates the use of currency here in Nigeria. All right, cryptocurrency is not like that. It's not controlled by any central authority. It is decentralized. All right, it's not controlled by any bank. It's not controlled by any individual. You can have the amount you want to have, the quantity you want to have. You can do whatever it is you want to do with cryptocurrency. Let me mention that in 2020, during the SARS period, I know those of us in Nigeria can remember when we had the SARS issue in Nigeria. All right, so many things were going on then. People were agitating and clamoring for removing a special squad in the police called SAS, Special Anti-Robbery Squad, okay, because of how badly they carried out their activities. At a point, that particular demonstration, or will I say protest, needed funding. Okay, people were clamoring, people were moving to places, protesting and all, and a lot of funding was going on. Okay, and at a point when banks started restricting the funding of this protest, because influential young people out there were funding the protest, making sure that people had what to eat in the protest front, people had what to drink, information was going out, and transactions were going on in the normal currency, the naira that we know. And when government noticed a lot of transactions going on, they had to start, controlling it. They started controlling it. So people that were, doing those transactions to aid the protest started getting controlled. In fact, some of the accounts started becoming frozen, and most of them switched to using cryptocurrency. Very, very interesting. Switching to cryptocurrency. So I have a certain amount of cryptocurrency and I want to make this purchase or buy something or sell something. I just use cryptocurrency to do it. No government can trace it. No government can actually trace it. No bank can stop it. That's what decentralization means. The second point is that it is pseudonymous. So users can remain anonymous while making transactions. Very interesting. These are the qualities that made cryptocurrency decentralized. So no user, is known in a way. You can choose what you want to be known by. Nobody has control of your details. It's not like the normal bank that has your address, your name, your date of birth, and all of that is pseudonymous. So you can remain anonymous while making transactions. Thirdly, all transactions are publicly recorded on the blockchain. I want to very importantly mention or talk about the blockchain. I think I'll use the first slide to talk about the blockchain, because we need to understand what blockchain is. All right, blockchain is a certain kind of technology that was created for the sole purpose of advancing cryptocurrency. So blockchain technology is a decentralized network-based system supported by its users. All right, individual currencies, cryptocurrencies exist on a shared ledger. So there is let me just break it down in a very simple way that we are going to understand. All right. So blockchain is like, will I say, a list of transaction is like a list of transaction that shows every transaction that goes on in the cryptocurrency space. And blockchain actually was built in such a way that it cannot be hacked, it cannot be penetrated, it cannot be destabilized. Nobody can infiltrate it to alter transactions. It's a network of computers connected together in such a way that once somebody from Malaysia is doing a transaction, somebody in Nigeria is doing a transaction, someone in Egypt, someone in South Africa, someone in Morocco is doing a transaction, everything is recorded on the blockchain, and nobody can infiltrate it or maybe alter something like that. Maybe I send a certain amount of cryptocurrency and someone can hack into the database and maybe change the amount that they send. No, blockchain was built to be so secure, okay, that it will aid the advancement of cryptocurrency. All right, so it's just, will I say, a record okay, a document of record that has digital transactions depending on the currencies that are moving. So blockchain is that technology that helps cryptocurrency to work. A time will fail me to explain in detail what blockchain is all about. But just look at it like a chain of blocks. That's what brought about the name blockchain. Is actually a chain of blocks. Those blocks are transactions. Okay, once one transaction is verified, because that verification, remember I mentioned that cryptocurrency is decentralized. So that verification has to pass through so many people to confirm and to make sure that the transaction is very legitimate. There is no cheating, there is no backdoor movement. So once it is verified to be true, that block is completed and another block is open. So that's what brings about the name blockchain. So this is the technology that drives cryptocurrency. So it is transparent. I don't know whether we get me. These points that I'm mentioning are very important for us to take note of so that we understand where we come in and how far cryptocurrency is going to go. Because believe me, in the next 10 years, we'll have more of cryptocurrency transactions more than even the normal currency. Let me just mention some cases that have started happening in Nigeria recently. Before last year, cryptocurrency was actually banned in Nigeria. You couldn't do cryptocurrency. It wasn't allowed. Okay, you can't swap your cryptocurrency for fiat. That you can't swap it for naira, for instance, in Nigeria, or dollar. If that's the currency you use in your country. So for Nigerians, you couldn't swap your cryptocurrency to naira. At a point, that ban was lifted, but just recently, so many things are going on in the cryptocurrency space in Nigeria, and its government wants to so much take control and centralize cryptocurrency, because at a point, it looked as if the price, the value of our naira was rising so much, and well, they felt maybe it was because of how much volume of transactions was going on using cryptocurrency. So many people were converting their naira into stable cryptocurrencies like the USDT. Okay, that's the stable cryptocurrency that doesn't fluctuate so much. So it looked as if they felt that was the reason why the naira was rising, and they started doing everything they could to centralize it. But believe me, there is nothing government can do to centralize cryptocurrency, because from the comfort of your home, some of the people listening to me here are still carrying out cryptocurrency transactions, and government cannot do anything about it. They can do a very little. They can do very little, because I'll be mentioning some terminologies that involve cryptocurrency, and I'll tell you some things that, especially for us here in Nigeria, that government is trying to do, all right, to will I say stop whatever it is that is going on in the cryptocurrency space. But believe me, they can't do so much. Why? Because there is no central authority. They can't influence the blockchain. That's how good cryptocurrency is. So the last point that I want to mention here is that cryptocurrency is secure. Okay, so cryptography ensures the security and integrity of the system, just like I told you. It takes so much, to infiltrate the system. In fact, if one wants to infiltrate the system, if you know what it is going to cost you to infiltrate the system, it's not going to be worth it to even give it a try or think about it. The system is so secure. It has been built in such a way that it is very difficult to infiltrate. Have there been cases of infiltration? Yes, but very few. Very, very few. And that is actually a very good and advanced development when it comes to financial transactions. So it looks as if cryptocurrency is, will I say, a trustless kind of advancement in the financial world. So people are switching to it so much because it's something you can trust. All right, the system has been built in such a way that you can trust it. You don't need to see my face to send me cryptocurrency. All you just need to have is my wallet address. We will later come to that as we advance in this class. Please, I hope we are still following. I hope I am not so fast and I am carrying everybody along, because I want that this class is impactful to you and you go home learning a thing or two from this class. So I'm going to move to the next slide. Just like I mentioned, I've talked about blockchain. So blockchain is just a connection of blocks, okay, blocks that involve so many transactions that have been verified across all systems and have actually been permitted to be recorded or registered on the blockchain. So that's what blockchain is basically about. So I want us to move to how cryptocurrency works. How does cryptocurrency work? All right, how does it work? So we are going to just use the example of the normal transaction or the normal currency that we know. So remember, I mentioned from the beginning that cryptocurrencies are not currencies that you see with your eyes or you touch with your hands. They are digital. All right, they are digital assets. Okay, so someone requests for a transaction, you have a cryptocurrency and you want to use it to purchase a certain kind of good or pay for a service or trade. What you do is to you will I say engineer or push for a transaction using the futures of those cryptocurrencies. So how does cryptocurrency work? How does it work? Let me just move to the next slide so that we are going to talk about it in details. So if I want to get a cryptocurrency right now, how am I going to do it? If I want to get a cryptocurrency, how am I going to do it? Now, the fastest way to get cryptocurrency is using what value you have. For instance, if I have naira, if I have the money equivalent of currency in my country and I want to convert it to cryptocurrency, I just go into the cryptocurrency market and change my naira to a certain value of cryptocurrency. Let me use, for instance, in 2020, around the month of July, that was when cryptocurrency was still growing. Then it wasn't so much popular, so many people haven't known about it or even heard about what it was. At that time, Ethereum was still Ethereum is one of the most popular cryptocurrencies we have. In fact, after Bitcoin happens to be the most popular cryptocurrency, and Ethereum is the second most popular cryptocurrency in the world. So a friend sent me something to read about Ethereum. And after I read it, she told me what to do. I created my wallet. So wallet is like a bank account. I'm mentioning some of these terminologies. I'll still touch it later at the later part of the class. So wallet is like your bank account. So I had to create a wallet. All right. And I used my money to pay for a certain amount of cryptocurrency, for a certain amount of Ethereum. I remember how much I used to buy that amount of Ethereum. I bought 0.0347 Ethereum as at 2020. Okay, as at then the value was less than 10,000 naira. That's less than let's say less than $7 right now. But I can tell you for free that that amount of Ethereum that I bought in 2020 is over $300 worth right now. It's over $300 worth in a space of how many years? In a space of 4 years. Remember, I talked about volatility. So I purchased that cryptocurrency, and just by paying that amount of cryptocurrency was sent to my wallet. So your wallet is like your bank account. All right, we are going to talk about wallets in the later part of this course, but just to mention it, your wallet is like your bank account where you store your cryptocurrencies. Is also secure. Of course, you have the password and you have access to it. So if you want to own cryptocurrencies, you purchase them and have them sent to your bank account. To your wallet, which I mentioned is like your bank account. All right. So let me move ahead and explain this slide that we are seeing right now. So traders trade on the exchanges, and there are websites where you can buy or sell cryptocurrencies for a small fee, typically assessed as a percentage. Remember, I said I had to go online to exchange my naira for a certain level of amount of cryptocurrency, and it was sent to my wallet. Now, as I got that cryptocurrency in my wallet, I could trade that cryptocurrency for more cryptocurrencies. I could trade it even for more naira if I wanted to trade it, because the cryptocurrency market allows you to be able to trade the currency you have to get more currencies, or in fact to get another currency as you desire. That's the way it was created. Well, that's what brings about crypto trading. All right, so you exchange it for another currency via trading. There is the cryptocurrency market. We know about the stock market. We know about the stock exchange. That is also how cryptocurrency is. We also know about the foreign exchange market. If you mention it, you have the New York Stock Exchange. You have the Nigerian Stock Exchange for us here in Nigeria. So what do? They actually trade currencies. All right, not just currencies, they also trade commodities. That's how the cryptocurrency market has also been made to be. So you can trade your cryptocurrency for other cryptocurrencies, and you exchange it for several goods and services as you desire. So okay, someone asked in the group, is blockchain same thing as cryptocurrency? No. Let me explain it in the easiest way that you can understand. Blockchain is like the internet. All right, the internet is, will I say, that technology that facilitates so many things that happen. For instance, you can't have your email work without the internet. So the email works on the internet. It's just like the way cryptocurrency works on blockchain. In fact, blockchain was a technology that was basically created for cryptocurrency. It was a technology that was created to advance or make cryptocurrency work. So cryptocurrency cannot work without the blockchain. All right. Now, there are so many other things that the blockchain can do aside cryptocurrency, but cryptocurrency is one of the major things that runs on the blockchain. Okay, I want to talk about centralized exchanges. I was talking about how one can position themselves to get a cryptocurrency. Okay, centralized exchanges are exchanges that are centralized, that have owners, where you can trade cryptocurrencies, where you can buy cryptocurrencies. One of them is the most popular one we know. We know the Binance. So Binance is a centralized exchange. Of course, there are people that own Binance. So they created a certain level of exchange where you can trade your cryptocurrency, where you can even store it, or you can exchange your cryptocurrency. For instance, I have Ethereum as a cryptocurrency, and I want to exchange it for Bitcoin. Binance makes that very, very easy. So just by having Ethereum, I can swap it for Bitcoin. So these are centralized exchanges, not just Binance. There is a KuCoin, there is Bybit. These have been developed to even become applications on phone. Let me mention right now that I am going to be giving out a free cryptocurrency course. It's a very simple course that I have, that I'm going to be sharing with everyone here. I don't know how I'm going to make it available to everyone. It's just a very short cryptocurrency course that will help you to understand how to trade cryptocurrency, how to use cryptocurrency, how to exchange cryptocurrency. Let me make this very important. We know that as technology keeps advancing, people are taking advantage of it to advance a certain kind of course, to advance a certain kind of program. And that is why we as children of God should also not be ignorant in this particular aspect, so that we can be involved in the system. This is the only way we can combat whatever it is that will be an ill or will I say a wrong that this advancement of technology can bring. It's only when you are involved in the system that you can be able to tackle whatever wrong or bad thing that is in the system. That is why you must understand how this works, because believe me, if government cannot control the way cryptocurrencies are being exchanged, then anybody can take advantage of it. All right. So terrorist organizations can fund what they are doing just by using cryptocurrencies, because nobody can stop it. Nobody can, censor it. Nobody can control it. All right. It can be used to do anything. It can be used to do anything. So if it falls into the wrong hand, that was why I mentioned character development. When you have a skill, when you have a certain kind of knowledge, and there is no character, especially there is no godly character, especially, it becomes chaos. So you can just use it, to advance an evil cause. It falls into the wrong hand. But what of when it is in good hands? When it is in good hands. All right. So Binance, Bybit, KuCoin, these are centralized exchanges, marketplaces. All right. You can call them the bank of cryptocurrencies, where you can come, exchange your cryptocurrency, trade, do transactions, send to somebody. So if I have an account with Binance and I want to send someone cryptocurrency, you also need to have an account with either Binance or any centralized exchange. In fact, it happens to be that all you need for cryptocurrency transaction is your wallet address. And the wallet address doesn't carry your name. It's so wonderful. It's not like the bank account that you have. For me to send money to somebody, from my bank to the person's bank account, I'll need the account number, I'll need the name of the person and the bank. But in cryptocurrency, I don't need to know the name of the person that I am sending this to. So you cannot actually trace who is doing a transaction, who is sending, who sent to you, who you're sending to, unless you are in discussion with that person. All right. So just by knowing my wallet address, okay, and actually the coin linked to the wallet address, you can send cryptocurrency and you can receive cryptocurrency just with your wallet address. So I mentioned centralized. Then there are also decentralized exchanges. All right, these ones are not controlled by anybody. Like they are not marketplaces that are owned, that can, will I say, to a certain level, monitor or control the certain transactions that go on in that marketplace. All right. So remember I mentioned that cryptocurrency is still decentralized. Nobody can control it. So in fact, nobody knows what is going on there. It's just that at some certain point, it can be tracked. But to what extent can it be tracked? All right. So that is what decentralization means. So these two have advantages and disadvantages. I'll just switch to the next slide, okay, so that we understand better what this crypto trading is all about. Now, cryptocurrency has also advanced up to the point that it is not just currency forms. Like we have several coins, several digital currencies. For instance, one of them is Bitcoin. I mentioned Bitcoin before. You have Bitcoin, popularly known as BTC. You have Ethereum. You have LTC, that's the Litecoin. You have the Ripple, XRP. These are various cryptocurrencies, all right, that can be exchanged on the crypto market. Now, something also happened. There was an introduction of digital assets that are not currencies. So I can trade my another asset that is not currency on the blockchain market, on the crypto market. Okay. I can sell my music using crypto. I can get people to buy my music using crypto. I can sell assets that I have, like laptops, phones. I can sell my art. I can do a painting or a drawing and I have it sold. Maybe I just place it on the crypto market and people pay for it using their cryptocurrency. So it's a certain level of advancement that is so crazy. And I trust that as we are learning today, we understand that we should also be positioned to know how to use it, because a point will come when transactions will change hands. A point will come when transactions will change hands, and we'll see more of introduction of cryptocurrencies. All right, transactions going everywhere. So I've already mentioned how to acquire cryptocurrencies. Remember, I mentioned earlier that there is a course. It's a very short introductory course into crypto trading. Give you step by step on how to acquire cryptocurrencies as you desire, based on the amount of value that you want or you have. All right, so I'm going to mention types of crypto trading. There are different trading strategies one can use. These strategies can be applied to different assets or sectors within the crypto market, each which may differ from another in the expected behavior of the market. All right, let me just skip all of that and go to the two basic kinds of crypto trading we have. We have the spot trading. Okay, I started out as a spot trader on the crypto market. Spot trading is just basically having a certain value of a cryptocurrency and you want to exchange it to get equal amount of another currency. Okay, so for instance, when a trader says they like to spot buy one Bitcoin, means they're actually buying one Bitcoin, which they can subsequently trade further and take off as an exchange. So if I have one Bitcoin and I want to trade it to get Ethereum, it means that the value of Bitcoin and the value of Ethereum will be checked. This is a candlestick slide. This is actually showing the market movement of cryptocurrencies. All right, if you're also familiar with stock trading, this is also how the chart looks like when you want to trade stocks, and when you also want to trade foreign currencies in the forex market, this is also how it looks like. Okay, so the same thing with the crypto market. So for instance, let me use Bitcoin and Ethereum as an example. The current value of Bitcoin now is around 66,000 something dollars. All right. So one Bitcoin is $66,000. That's the value of one Bitcoin. So for instance, if I have one Bitcoin and I want to exchange it for Ethereum, Ethereum is at, let's say, 3,000, that 3,600 or 3,400. It's above $3,000. So if I have one Bitcoin and I want to exchange it for Ethereum, it means that I will have 66 divided by 3,000. That value is the amount of Ethereum I'm going to have. If you divide 66 by 66,000 by 3,000, I think it's going to give you roughly that 22. I think it will give you 22. Okay, so if I have one Bitcoin, it's equivalent to, let's say, I just want to be right. Let me check my calculator and divide this. So if I have 66,000 Bitcoin, that's the value of one Bitcoin, and I want to get Ethereum that is also 3,000. Okay, I am actually correct. One Bitcoin is equivalent to 22 Ethereum. It's just like when you want to exchange the naira to the dollar. So if you have $10 or $100, if you have $100, that's approximately 120,000 naira. So that is also how cryptocurrencies work. All right. So this chart that I just showed here are candlestick, but I'll come back to it. Let me just finish the slide that was before it before I come here. So I was talking about spot trading. So spot trading is exchanging the crypto you have for another cryptocurrency to the equivalent of the one you have. So if I have one Bitcoin and I want to exchange it for Ethereum, so once I exchange it, I'll now get 22 Ethereum. All right. That is how it works. Now, what of derivatives trading? Derivative trading, this refers to trading of contracts whose value is dependent upon price movements in the spot markets of underlying crypto assets. Let me explain this in a very simple way that we can understand. What derivatives trading does is it helps you to be able to earn more of the asset you have just by trading on the market. So for instance, you are in the market, you have Bitcoin, you have one Bitcoin. and you use your one Bitcoin to, will I say, monitor the movement of Bitcoin, and taking notice of the movement, the price movement, or the price range of Bitcoin at a particular time, and you're saying at so point in time, I feel that Bitcoin will be at so price, and you use your Bitcoin to buy into that market. That's futures trading, derivatives trading. So you are hoping that at a certain point, the money that you have, based on the movement of the market, you will either gain from it, and if it doesn't go to the way you predicted the market was going to go, you lose. That's why we buy stocks. We buy stocks so that when they rise in value, we can make profit. That's the essence of business. That's the essence of trading, to make what? Profit. And that's the same way it is in the crypto space. So for derivatives trading, okay, I have one Bitcoin, and I look at the movement of the market, and I see that, okay, from my prediction, Bitcoin is going to move from $66,000 to $100,000 in a space of 1 month. And I put one Bitcoin into that market, and predict that it's going to move. I just put it there and lock it in. And when Bitcoin starts rising from that particular amount that it was up to the amount that I predicted it to be, all right, I make more Bitcoin. That is derivatives trading, or if you will, futures trading. Let's look at this chart. This is what you will definitely see when you are in the cryptocurrency space, or when you are in the forex space, or in the stock market space. These are candlestick charts. These are candlestick charts. I think I will also share a particular PDF that will help you to understand from scratch how to read and understand this chart, because this is actually market movement. If you look at this chart, you will see green candles. These are called candles, green candles and red candles. The green candles are moving up, the red candles are coming down. The green candle stands for up movement, or what you call bullish. Okay, there is the bull movement, and there's the bear movement. Okay, these are terminologies that will definitely come to before this class ends. So these are candlestick movements. The green ones represent the bull candle, the bull movement. It represents an increase in price, and the red represents a decrease. That's how it is. So these candlestick patterns help you to understand what is going to be the movement of the market. So if you see this candlestick movement, you find out that it came to a point and got down and started going up up until the last part. All right, that's how normally market movements are. So this knowing how to use these candlestick patterns to trade in the cryptocurrency market is actually what we call technical analysis. So there is a way you can learn how this candlestick pattern works, and if you're able to predict right using technical analysis, you can be able to tell how much a price is going to increase or reduce based on your analysis. There is also fundamental analysis. These are the two kind of analysis that are used in trading in every market, be it stock market, be it cryptocurrency market, be it forex market. You use technical analysis, basically talking about these candlestick patterns and charts. All right. Then fundamental analysis talks about the inflow of cryptocurrency into the cryptocurrency market. So you basically use what is going on in the market, the news that is happening, all right, to be able to determine whether there will be price surge or not. Let me give a very simple example that is going on right now. All right. When I think it was last week that a certain cryptocurrency called Notcoin launched, and so many people, in fact it was on the news, so many people that were able to get cryptocurrency just by doing some certain kind of task online, got value for the amount of Notcoin they had. So Notcoin listed on several exchanges, and it actually became a digital asset that you could exchange for money, and so many people took advantage of Notcoin and made money in the cryptocurrency space. And when Notcoin launched, it increased the price of Notcoin, to a very, very good amount. And then after Notcoin, there is also another one that gained so much popularity. It looked like a game that you play on Telegram. It's called Tap Swap. I know most of us would have heard of it. Most of us are also involved in playing the tap swap game, where you just tap on your screen and end tap swaps. All right, Notcoin was actually what made tap swap so very popular. One of these terminologies in the cryptocurrency language will help you to understand why tap swap gained so much popularity. All right, so let me go into understanding the cryptocurrency language as I round up. So I've talked about the wallet. Wallet is like your bank where you store your cryptocurrencies. Okay, there are centralized and decentralized wallets based on the exchanges, just like I mentioned. Then address is like your account number. All right. So the third one that you see there is FOMO. It stands for fear of missing out. So because I heard that a lot of people made money from Notcoin, and I somehow I didn't hear, or I didn't do what they did to be able to earn Notcoin, and I found out that there is another one that is just like Notcoin that is likely to launch very soon, called TapSwap, and I put all my energy to make sure that I tap as much as I can to earn enough coin. So that's actually what fear of missing out is. So I missed out on Notcoin, and I don't want to miss out on TapSwap. So I rush into it immediately. All right, that's called fear of missing out. I don't want to miss out. All right, there is fear, FUD, stands for fear, uncertainty, and doubt. All right, that's emotions that are involved in trading the cryptocurrency market. Remember, there are risks trading the cryptocurrency market because it is very volatile. I know I mentioned this before when we were starting. The cryptocurrency market is so volatile. So the price of a particular coin can so increase. In 2021, there was a coin that I used. I bought that coin with $25 because it did 500% increase in price. So I just carried all the assets I had and exchanged to get that coin. And trust me, in the space of 1 month, my $25 was not even up to $1 again. That was what fear of missing out did to me. Because cryptocurrencies are so volatile, it can rise, it can reduce. However, it can also be predicted. If you learn it very well, you can predict the rising and the falling. But sometimes even your prediction may not be able to work. I don't know if time will permit me to do justice to every of this cryptocurrency language, but this actually is what you are going to get in the little introductory course that will teach you, practically. This class will not afford us the time to go into details. I like going into details a lot. I want to show you, go to this place and do this thing, get this is what you're going to do, this is what you're going to do, this is what you're going to do, and you start out in the cryptocurrency space. But time is not going to afford us to do that. Maybe we are going to have a part 2 of this class. I don't know if that sounds good to you. If we can have a part 2 of this class to go into details of talking about how one can, have cryptocurrencies, have a wallet, create your wallet, get a certain amount of cryptocurrency there, know how to, find your way into these cryptocurrency exchanges and trade in the cryptocurrency market. This is quite a lot, all right? Just like I mentioned before, it's a skill. And remember, if it falls into the wrong hands, it leads to chaos. All right, so this will bring me to the end of my class. I believe that we gained a certain level of value in this class. We didn't have so much time to talk so much about go in depth about cryptocurrency and how it works, because this class is meant to lead you to know how to get started. That is actually the essence of this class. How do you get started? How do you get positioned? So by God's grace, we are going to have a part 2 of this class. I believe that God is going to help us to get it achieved. And once we set it up, we will let you know so that you can be part of it. Thank you very much, and God bless you for being in this class.
Thank you so much, Chidi. This was very insightful. I mean, I have good knowledge on cryptocurrency, but this really like opened my eyes to some things that I might have missed. We really appreciate you